All right, welcome to another exciting episode of Rogue Finances and Life, where we are life and financially sound. Today's guest is Mr. Mike Allison. He is a financial provocateur, and he helps people. He is also the founder and CEO of Lanter Advisors, and he helps people when it comes to retirement. So with no further ado, here's Mike Allison.
Thanks for having me, Jesus, and appreciate the chance to chat with you. Yes, I founded New Lanter Advisors at the earlier in this year after retiring from my corporate life, after spending 33 years in the investment management business. I wanted to launch a small firm where I could work with just a smaller number of clients and really work more directly with folks on a really comprehensive financial planning and investment basis, where we really dig deep into that period going into and shortly after retirement, because it's a critical time in life. And as certainly the events of in the markets in the last couple of quarters, it would indicate you have to think a lot about the risk you have in your portfolios as you're approaching retirement and going into retirement. And that's a key focus for us in the work that we do with clients. So we're based in Saratoga Springs, New York, but we work virtually with everyone, for folks all over the country. So that's kind of where we started, and happy to talk further on whatever topic you'd like.
All right, that's awesome. I'm also in the financial industry. I'm with PFF Financials, and we also do something where we help people how to plan for retirement. So basically, but I'm very interested in some of the key things that you teach.
That's great. I think so often when people are early in their careers or preparing for retirement, they tend to think a lot about the returns in their portfolios and trying to maximize the productivity of their savings in terms of building wealth. But then as you come into the years approaching retirement, you have to be much more risk aware of the potential for drawdowns in your portfolio at exactly the wrong time. And I talk about what I refer to as the three-headed dragon of risk. There are three elements of risk that you have to think about all the time, but particularly the critical years, the 3, 4, 5 years before retirement and the first few years after retirement. And those three components are, or the three heads of the dragon of risk are confidence to take risk. And another way of saying that is risk tolerance. And a lot of advisors talk to their clients about what's your risk tolerance. But as Mike Tyson said once, everybody's got a plan until they get punched in the face, and things kind of go sideways. So just because someone says that they're willing to endure a certain level of risk, that doesn't mean they really are. But that's part of the conversation. The second is very critical, and it's around this life cycle idea, and that's the capacity to take risk. And even if someone has a high degree of risk tolerance in their psychological makeup, as a fiduciary, as an advisor whose best interest the best interest of the client is their main and only focus, you have to take risk out of the portfolio during those early years of retirement, because it's one thing to invest over time and just ride out the storm when you have turbulence in the markets, as we've had the last few months. But when you're transitioning from getting a paycheck to creating your own paycheck from your portfolios, when you start to take money out and withdraw from your investment accounts to fund your retirement, when the market is down, that is you have have to minimize that drawdown risk in the portfolio. Otherwise, you're taking too many soldiers off the field, selling assets for, to raise cash to meet your expenses at a time when the markets are down. And so the body of the portfolio, the size of the piggy bank is diminished even more so than if you were just kind of waiting for the market to recover. So you have less to work with on the other side of that, and that's an important aspect as well. And then the third component of risk that we talk a lot about is compensation for risk.
Exactly.
And that is the risk and return as it relates to different asset classes. We all kind of think about, well, we had to take more risk to get more return. That's true conceptually as a general matter, but sometimes assets are overvalued, sometimes they're undervalued versus their intrinsic value. One of the drums that I beat a lot and I talk a lot about and I write a lot about is this idea of overvalued financial capital. And we've had a 40-year secular decline in interest rates that's created an enormous amount of wealth, financial wealth. But to a certain extent, at the expense of human capital. Some people would call that labor. I call it human capital. And I think one of the things that we are starting to see now, and this is partly driven by demographics and people aging out of the workforce, aging and aging out, is an upward pricing in human capital or labor. And we see it all around us. There are labor shortages and of various types. But I do think there's going to be upward pressure to wages and people being able to monetize their human capital. And there's lots of different ways to do that. Increasingly more flexibility as it relates to starting your own business, and that's one of the other things that I think we're seeing more and more of. Folks who get into their 50s, 60s, they've been at that career for a few decades. They want to change. Maybe they don't want to just go play golf every day. Maybe they've got more to offer the world and still want to have something valuable to do and to offer the world. And so more and more people are starting their own business after they quote retire. That's exactly what I did. And so when I talk about clients, I'm really talking about fellow travelers. People are sort of in the same or similar boat as me. They've reached a place in their life where they want to contribute differently and have more flexibility in how they do it. I think that's one of the other things that, this whole remote work and work from home, which the pandemic, kind of accelerated. A lot of that has to do with people's just desire to have more freedom with their time. And that's really what retirement's about, if you think about it. Having the resources to be able to have more freedom over your time and how you spend your time and the things you do or the things that you choose not to do.
Exactly, that's true. Now, have you ever find out that a lot of time people, when they talk about retirement, they don't think about inflation?
There's a lot of good financial planning software out there that some advisors use, and you can bake into your assumptions the whatever inflation expectations you might have over a course of time. The problem with that software is it tends to be very linear in its assumptions. It's going to assume long-term inflation of X. And, and I do think inflation, although it's been elevated the last year or two, it's going to come back towards long-term averages. But in the near to intermediate term, that doesn't do anybody any good. And so we have to really reflect on the purchasing power of the assets that we have. And that goes back to my argument about human capital and continuing to monetize your talents in whatever ways that you do. If I'm right, on a secular basis, there's going to be more challenge in the financial world, financial capital, and more benefits owing to the human capital side. So someone who decides they want to quote retire, that to me is a different version of saying selling at the bottom, when the market's down. Because if we're going to get an upward pricing on average over a long period of time of labor or wages or human capital, then you're leaving the playing field at exactly the wrong time.
Got you.
And then you're relying on financial assets, which may not have the greatest returns over the next few years while that process of rebalancing happens. And that doesn't mean that, we're going to have down markets forever or anything. That's one way to rebalance it. But typically, the market tends to run in pretty long cycles, and then it'll mark time for a while. And that's how the real economy starts to be able to catch up. And I think we're going to be going through that process. I'm of the opinion we're going to go through that process for the next few years while the real economy catches up to the financial economy.
Yeah, that's true. Now, you founded a financial advisory firm to serve those who looking to retire, but yet you encourage your clients not to retire. Can you
That's
elaborate on that?
You bet. And first of all, retirement is just one of several transitions in our lives. And a lot of what I talk to clients about is don't retire from something, retire to something. And what is that? What is your what's next? And that is a key focus, because just because you don't want to keep doing what you've been doing for the last 20 or 30 years, that doesn't mean you have to declare or let the world declare that you're now no longer worth anything other than what's in your investment accounts. So I go back to this idea of continuing to monetize your talents, continue to contribute. But if you want to make a transition, which many of us would call the traditional notion of retirement, that is just a transition away from what you've been doing and to what it is you want to do.
Okay.
And
yeah,
so we can call that retirement. Typically, it'd be what folks call retirement. But a lot of times when people just leave the workforce, in a year or so, there's only so much golf you can play, only so much, leisure activity you can tolerate before you get bored. And then you want to get back to doing something else. And, to me, that needs to be all part of the plan, and not just sort of this, even if it's programmed, you're going to take a 1 or 2 year sabbatical. Some people would call that retiring, but know what you're going to do when that time is over, and have an idea.
Would it be something like when athletes retire from playing the sport that they play, and they go into like newscasting? Same situation, right?
I think it's very similar, and that's a great analogy. I've never thought about it in those terms, but it's actually really true, because if you think about, people typically have a 30 or 40-year working career after they become adults. But professional athletes, their career, I think the average NFL career is less than 4 years. And, a lot of these professional athletes will make a lot of money in a short period of time. So you think about what a typical person would earn over a 40-year career and concentrate all that compensation in a few years. Then somebody walks away in their late 20s or early 30s, if they're lucky. And then they have to figure out what they want to do with the rest of their lives, because they can't continue to do what many of them have been doing since they were children. And so being thoughtful about what you're going to do when you stop doing what you've been doing is a very, very important conversation that advisors need to have with their clients, and that folks need to have with themselves and their families.
That makes a lot of sense. Now, so what is your investment superpower?
One of the things that I have always enjoyed is the educational component to what I do. And when I was at my firm that I left at the end of the year, Boston-based investment management firm called Eaton Vance, which was unrelated to my retirement, but my retirement from Eaton Vance was acquired by Morgan Stanley. My retirement had already been announced, and it actually got delayed by 6 months. Oops. Are you there?
Yeah, I'm here. I can still
My
see you.
apologies.
Here.
Yeah, my apologies. I had a little snafu on my computer there, and it looked like you went away. My apologies. Um, but at my firm, and as an equity portfolio manager and director of equity strategy implementation, we had some pretty complex investment offerings, very solutions oriented, not cookie cutter. And a lot of the benefit to clients is something that was not always obvious. It needed to be explained. It was an educational kind of a process to say, this is how it works, and this is why it'll benefit your clients. And the ability to travel with our wholesalers or our sales force and talk to other advisors and their clients and explain to them why this particular strategy or this particular offering is, what problem it solves and why and how it works. That to me is the part that I always enjoyed. And that's what led me to do what I'm doing now, which is to be able to talk more directly with folks, less distance between me and the client. And so I've always thought of that as sort of, and others have said it to me as well, that was one of the things that I really it was valuable to be able to explain fairly complex investment concepts to folks who weren't necessarily investment professionals.
That's great. So you basically founded New Lanter Advisors to provide your clients with a different avenue, and like you said, more personal experience.
Mm-hmm. Correct. Yeah, in a much more select group of clients. I only have so many seats on the bus. I don't intend to build a big giant firm. I call it. I think of it more as a practice than a firm. I may at some point bring on another teammate, but my goal is to just work as closely and directly with clients as I can. Another constituency that I serve is other advisors, and explaining to them how a lot of the things that I do for my direct advisory clients, my wealth management clients, I can also help them do for their own clients. And that takes me back to my roots of talking to other advisors and seeing the light bulbs go off when some of the strategies start to make sense to them, and all that. That was always one of the parts that I enjoyed, was you could see in people's eyes when they started to get it. And so that is another offering that we have to help other advisors. So that's really where my growth will come from mostly.
Well, I definitely could say that I learned something new today, because you hear people talking about retirement, but we never thought of, I never thought about it in the point of basically, yes, you are stopping doing what you was doing as an employee, but now you have to have a plan in place to what are you going to do, because you still have a value, and now being able to use that value and continue to, and that's I love it. I love that idea.
That's great. And I think, if you think about longevity, right now there are 1 million people in the US that are over 100 years old. And in 25 years, that's going to be 12 million. So when someone gets to be their late 50s, early 60s, and they're saying, yeah, I don't want to keep doing what I've been doing. The nest is empty. I've been doing this for a long time. I want to do something else. Well, it's retirement. That's not the end of something. That's halftime. You got another 40, 50 years to go. So, the idea that you can just do nothing and live off your piggy bank for the next 40 or 50 years, especially if I'm right in having maybe several years of returns in the financial markets that are not what they have been the last several years, then you have to have a different plan. You need to have something else going on. but again, to me, the true definition of retirement is having freedom to do what I want to do with my time and to do the things I want to do and to not have to do the things I don't want to do.
That makes a lot of sense. And that's pretty much what I just turned 50. I'm really to the point where I don't enjoy going to work at the shipyard building ships. And ever since I found PFF and I had learned how to be an entrepreneur and how I can help people, it's more, I get more out of that than that's basically what my wife and I, that's what we want to do. We want to go into stop doing what we're doing, but then helping people in a different way, providing services to other people.
And they need you. There's lots of folks out there that need help.
And
of all sorts.
And
all sorts of people, all sorts of help.
And we also want to also advise or educate the newer generation so they can find themselves on a position where they can make that transition at the age they're ready to, and not so much whenever the government kind of like tells them they have to.
Right. No, I think that's that's a worthy ambition that you have, and I congratulate you on heading in that direction. I think it's there's a lot of folks out there that could use your help.
Yeah, definitely. Well, anything else you want to add? I really enjoyed this. I really learned that, like, you even opened my mind to look at that word retirement in a totally different view.
Another phrase I've heard people use sometimes is don't retire, rewire.
I heard that too. That's right.
So it's just a different, a different way of thinking about it.
Well, thank you. Thank you much for your time. I really appreciate it. I know my listeners are really going to enjoy this episode.
That's great. Thank you so much for having me, Jesus. I really,
definitely.
I really do appreciate it.
You want to leave like some information on how the folks want to reach you?
Yeah, just take a spin over to newlanternadvisors.com. There's a lot of educational content on the website. Learn a little bit more about me, how we work with clients, both on the comprehensive wealth management side, but also on the portfolio services side, where we help other advisors, with their help them serve their clients. So, just pop on over to the website, join the mailing list, and we have a lot of good content that we put out, and it's highly educational as well.
Definitely, we sure will. Oh, well, thank you again for your time. This is all the time we have for now. I hope you guys enjoyed this episode and you find it very educational. See you until next time.
Thanks a lot, Jesus.
Thank you. And